You found the neighborhood. You love the floor plan. You can already picture pulling into that driveway. Then the lender pulls your credit. And just like that, the dream is on hold. Bad credit doesn't just sting, it stops everything. And nobody tells you what to do next. Until now. Welcome to the Credit Confidence Home Buyers Club podcast, where we sit down with real builders across Texas so you know exactly what's out there waiting for you. Let's go get your home.
Hey everyone, welcome back to the Credit Confidence Home Buyers Club. Today we've got a guest who spent the last 25 years helping people get into homes, and he knows the mortgage side of this business better than almost anyone that I've talked to. My guest is Mario Galdos with Triton Group Home Loans at Legacy Mutual Mortgage. Mario has been doing this a long time, and today we are going to get into what it actually takes to get approved for a mortgage, some of the mistakes people make along the way, and since a lot of our audience is looking at new construction, we'll dig into what's different when you're building versus when you're buying an existing home. And so if you've ever wondered what a lender is really looking at behind the scenes, or you're getting ready to start the home buying process yourself, stick around. This one is going to be useful. Mario.
What's up, brother?
Thank you, bro, for joining us.
Thank you, man.
How exciting. We've been chopping it up already now for a couple of hours. Business stuff, personal stuff. We know each other.
Oh, yeah.
We go way back. We're great friends. You've been an absolutely amazing, great friend, great homie. Like I just can never say enough good things about
Thanks,
you.
brother.
So
Likewise, man.
let me just start the podcast off on that note.
Yeah,
Right? You know what I'm saying?
Likewise, man. All the feelings the same. So grateful that we've been able to be in each other's circle as long as we have, man.
Amen.
So,
Amen to that, bro. So yeah, I mean, we've got some longevity in this game together. We've worked together on different projects, some of it real estate related, some of it not, so we've got some cool perspective. But nonetheless, one thing has remained constant. Mario has been the mortgage guy. Mario has been the mortgage guy, and he's been the bald guy with the bow tie.
ball guy with a bow tie.
So we'll definitely give a little plug for your whole shtick, which I love, right? And that's what a lot of people know you as. But on a serious note, you've been in the game for such a long time, dude. You're no newcomer to this world, right?
Yeah.
Can you give us just like a quick little intro, like just a little bit about yourself, whatever I didn't cover yet.
Absolutely.
Just you cut to the key points.
The key points, sure.
Whatever you want to share.
Not my life story, but
we don't have
high
to
level.
do the whole thing.
High level.
But eventually we are going to do a book on that, by the way. But
okay.
That's a different project.
There you go.
So yeah, give us just a little bit when you got started, the high points.
Sure. Well, again, Mario Galdos, bald guy with a bow tie. Thank you, brother, for having me on as a guest. I started in mortgage specifically in January of 2005. So that's 21 plus years ago. If you were in the season of looking forward to having cocktails in life, like my career could have some cocktails.
Seriously.
But just to say that, I will go a little before that. Just to say, I have a son named Darian. I had him at a very early age, so I was very motivated to find a career that was going to be fruitful for our family, and so got into mortgage January 2005. 07 market decided to start doing some interesting things.
Yeah.
I moved to a brokerage. That brokerage was not very looking forward to growing, so we ended up moving to another brokerage for about 7 years. Was there.
Okay.
That's actually where we met at, was when I was at that brokerage several years ago.
Yep.
I got into some mentorship with a group called The Core back in 2015.
Okay.
And that group really helped me understand the fundamentals of growing a great business, leading with value, really doing the right thing, showing people you care, and doing your absolute very best every single day.
Going above and beyond.
That's
all
really
that stuff.
it. Absolutely.
Yeah, that's all I've ever known you to do. By the way,
man.
And by the way, Mario did my mortgage when I bought my house.
That's right.
So that's
right.
definitely an honor
for sure.
An important note. So yeah, thanks to you, I was able to get the keys.
Hey, and that's always the intention, is to get everybody with the keys in hand to accomplish their goals for their families. So,
yeah, exactly.
On the personal note of things, I married at a very early age, divorced, but have a beautiful son as a result of that. My wife Stephanie and I we met in high school, but I could never get the courage to ask her out at that time because she was the hot dance team girl that I just couldn't get the courage to ask out. But 10 years later, I'm playing in this rock metal band. I've got all the courage in the world. So I asked her out. I say we, but I asked her out. Long story short.
It was you and your conscience were asking her out.
That's right.
It was like, Mario, do it.
It's like, it's got to happen.
Come on, dude.
So,
you're the rock star now. Now's your chance.
Hey, this is the moment, right?
That's right. Yep.
2012, we got married, had our first son, Triton, which was where my team name, Triton Group at Legacy Mutual Mortgage, came from.
There you go.
And that was in 2017. So super, I say 2017. 2014 was Triton. I have another son named Atlas. He was born in 2017.
There you go.
All to say that this has been an amazing blessing of an opportunity to have a career
for sure
in a great industry where, there's lots of abundance of opportunity. And at the end of the day, what I always tell everybody is that, when you're buying real estate, nobody's dying. So, luckily, you have some high stress moments, intense moments, but at the end of the day, like, as long as you're great at setting expectations, it should all work itself out. So.
100%. Well, real estate is definitely a deadline intensive business, right?
Right.
There's all kinds of little cutoffs and deadlines, and people need to move in by a certain time. And sometimes people move from state to state or city to city, and they need to get this one sold before they get, there's a lot of deadlines, and that does make things stressful. Yep. But you've done it for a long time, right? And you've got the system and the process down pretty tight, right? Wouldn't you say, you and your team?
I think that's one of the biggest things that I got from that mentorship group, and that's something that I've been blessed to say that I've been able to pay it forward to others, is process, system, structure, and consistency. My big saying is consistency, consistently.
Yep.
Do the same things over and over again. It's going to provide the results as long as you're doing the right things, and again, leading with value, showing people you care.
For sure, 100%. Okay, so let's dive a little deeper. Let's go a little deeper into the nuts and bolts, into the weeds a little bit, so to speak, of this process. Our goal is to talk to an audience of people that maybe want to buy, but feel like there's a possibility they wouldn't get approved.
Sure.
Right? Because of their credit situation.
Right.
That's what the Credit Confidence Home Buyers Club is all about, right? Yeah. We want to be able to get people to feel like, hey, raise your hand, come forward. Maybe you wouldn't have otherwise, right? And let's look at it, because you and me, and then you yourself much more in your own business, have had many instances where people came to you, the credit wasn't quite there. Mm-hmm. Right. And through a series of either working with me or doing some tweaks on your end, you were able to get people there. Right. Sometimes it's little modifications.
Absolutely.
Sometimes things need a deep scrub.
Absolutely.
Right. And maybe that's where somebody like myself would jump in. But overall, though, there's a lot of opportunities. There's a lot of things that can be tweaked and adjusted. Right.
Right.
What would you say to somebody that's in that situation right now that maybe feels like, let's check this box. You do have to have some income, right? You've got to have some income. So if you're not currently working and you haven't been working for a couple of years, then you're going to have to kind of get that squared away.
Sure.
But there are actually a lot of people with income, but not the credit.
Right.
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 Can you share any of your perspective on those files over the years?
First of all, what I want to encourage everybody to do is to try. I teach some home buyer classes, over the years, and, even we do little classes just pretty much all the time because we're consulting folks one-on-one.
That's right.
But simply put, to say that you got to start with starting, and it's super important that you try. And that's the biggest thing, is to make sure that people try. So now let's say you try and it's not something that is the right timing. Somebody told me once, everybody is a home buyer. It's always about the timing, right? And so sometimes we feel like the timing is ready, but we're not ready, and that's where it really, you have to be able to be open-minded to say, hey, okay, we made some mistakes. Maybe we didn't make mistakes. Maybe you had a circumstance happen. It could be a number of things, identity theft, or it could be even going through a hard relationship or a divorce or a separation is happening. And it's nothing that you actively were pursuing. Maybe there's some joint debts where somebody stopped making payments.
That's right.
But at the end of the day, the biggest thing is to be mindful of what those things are and be open-minded to the suggestions and advice that you're going to be getting from the professionals like yourself, who, again, very tenured. I trust you with anybody that I want to personally help as well as a family, but really say that, that's why this is such a great partnership is because we understand the importance of helping others. And that's the big goal, is for us to be able to put you on a plan to make sense, that makes sense for you to accomplish your goals.
Yeah. No, 100%. And that was brilliantly stated, by the way. Great information. And so that's a big part of this. We like 50% of this is mental stuff. Like,
Absolutely.
we got to motivate you.
Yep.
Don't be afraid. Don't be ashamed. We're not going to judge you. You've probably seen it all, right? I know. Certainly I have. Like, I've seen some incredibly low scores, but you know what? Even in those situations, we can turn that boat around.
That's right.
Now, picture an enormous like oil rig boat. It's not going to turn around quickly, right?
Correct.
That ship's going to take a while, and that's okay.
Yes.
The key thing that I think both of us are looking for is a willingness to be coachable. Right, in that ability to actually take our guidance and take our advice.
That's right.
Right. So if we tell you that we need you to do X, Y, and Z, if we see that you're willing to do X, Y, and Z, I know I can say this about you because I've known you for a long time. You will absolutely stick it out for them.
That's right.
And you will completely go to bat for people like that. Right.
Absolutely.
As long as they are doing their part in the equation.
That's right.
People like yourself and myself both, we will actually go the extra mile to help get you there.
That's right.
Right. So yeah, any feedback on that?
Yeah, I think it's for me in general, my values are to again, do the right things, show people you care, do your very best, but also my pet peeves, if you want to call them those, are follow up and follow through.
Yeah.
Do the things that you say you're going to do when you say you're going to do them.
Sure.
I mean, at the end of the day, and that works both ways, right? Because
100%.
I'm committed to helping you accomplish your goals. Now, you'd also need to be committed to accomplishing
100%.
your goals, right? So that's what we're doing. We're working towards your goals. I never look at it. Some folks might say, well, it's sales, working towards a paycheck. I understand all that, but I promise you, if you really take heart in the fact that if you can help others get where they need to be, where they want to be,
sure,
it always works itself out.
Absolutely. Yeah. I couldn't agree more. All right. Some of the nitty gritty stuff. All right. Let's look at it from this point of view. I've heard of, you go and talk to a lender and they've got something called a pre-qualification, pre-qualified.
Right.
I've heard of something called flat out pre-approved.
Yep.
Okay. Is there a difference between those two things?
Absolutely.
What is that? Break that down for us.
Yeah, absolutely. So we'll start with pre-qualification, because really what that is you refer me somebody, I am going to reach out to them. We're going to get you to apply. The first thing, like I said, you got to start with starting. You have to try.
Yeah.
And that means filling out a loan application questionnaire.
Yeah, sure.
And so once that application questionnaire is completed, we're going to pull credit.
Sure.
We're going to look at the credit.
Yep.
Now, let's say in this example that you have a perfect score. It's beautiful and everything. But let's just say you're self-employed, right? Now, one of the big things that you need to do is make sure that all the documents are verified to verify, hey, this is the actual income I make as a self-employed home buyer, potential home buyer.
Yeah.
And what happens as a result of that is if you never verify those documents, and let's say the lender says, I'm going to write you a letter right now because your credit's so stellar, I'm sure you're great and everything's awesome. That is a pre-qualification. Okay. I've pre-qualified you. I'm telling you, hey, based on what you've told me here on paper, it look, in writing, just on from your own words, it's going to be good. Now, pre-approval takes it one step further. I'm asking you for those documents. I need you to send me the documents. I need to verify the income. I need to do everything to vet and understand that you are capable of the ability to purchase the home, right? So that's credit, income, assets.
Wow.
And those are I always call it the three-legged dog, which is kind of interesting. This poor dog is like, three-legged.
It sounds like a Pearl Jam cover.
Yeah. But just to say that, again, so start with credit.
Yep.
Income truly is this, I would say, the secondary most important thing to credit is income, because you have to make sure that the person's going to qualify debt to income ratio wise for the home that they're actually interested in purchasing, also for the monthly liability that they're looking to take on. To further that, assets, assets, the reason I don't put as much importance there is because we do have flexibility and options for programs like down payment assistance and certain things. But again, the options open up when you do have some money to put down.
Okay.
But again,
I got you.
That's the big order.
I love that. And you know what? I think it was actually Alice in Chains album that has the three-legged dog.
It was. I was thinking it was Pearl Jam too for a second there.
Like,
so
wait a minute, that's not Pearl Jam. So yeah, 90s rock junkies here for
that's
sure, right?
Yeah,
Except for I just couldn't get the cover right.
Rock.
So pre-approved basically means you're bringing the receipts on that one,
Correct.
right? You
Yeah,
got to be
all
able
the
to
proof.
back that up.
That's right.
But in the meantime, what does a pre-qualification allow me to do though? Like, is that where the realtors will say like, hey, I don't mind showing you some houses, or does that even require the pre-approval?
You're going to have different realtors, and this is the thing about everybody who's self-employed, right? You're going to practice things the way that you feel is best for you and your practice. But I'll tell you, as a seller, somebody who is selling the house, I want to make sure that the person walking into the house that's looking to buy my house is truly able to buy the house, is capable of buying the house financially and with all aspects, right? You don't want somebody who's looking and then all of a sudden they make an offer on the house and the offer gets accepted and you're in the process, you get into underwriting, all of a sudden they don't qualify. That's horror stories that actually happen to folks.
I see.
And I can't say that when I first started my career that I didn't fall into that trap. It was everybody was doing it, and I came from the school of, if you had a pulse I could get you a mortgage, because we were in the non-prime times where people would just tell you what they made and nothing would get verified.
Crazy,
so
man.
it is wild. And I will tell you I'm not comfortable with that. So to answer your question, right, it's going to be subjective to whatever the person, realtor in this case, is willing to accept so that they can show you a home. But I will tell you that if you want to be set up for success, and if you want to have something that's as good as cash walking in, and that confidence will really help you in the negotiating table, I'll tell you, like that is a key thing.
Okay.
Because you need to have that confidence.
Yep.
Then you need to go for the pre-approval.
Got you. I got you. Yeah. That's the one that really speaks volumes as to your ability to truly do something here.
Correct.
Right? Without that, you're just kind of like, there's not much to back that up.
It's like, hey, I hope this works.
Yeah.
Hope isn't a plan.
Right. 100%. Well, that makes sense. Now you mentioned, okay, so we got the credit aspect of it. We've got the income aspect of it.
Right.
I think I heard you mention something about debt.
Sure.
Okay. And if you didn't, then let's just get into it.
Absolutely.
Okay. There's this little terminology that's thrown around in the real estate world a lot, in the mortgage world, is DTI.
That's right.
Okay. That's related to debt. Isn't it?
Debt to income ratio.
Debt to income ratio. Most people carry debt.
That's right.
Which is why people like Dave Ramsey are so popular.
That's right.
Right? Because it's, for Americans, we have a tough time getting a grip on it.
Right.
Typically, right? It is what it is. The American way is, I make this much. I always live a little bit beyond that, at least.
That's right.
That's the American way, right? Except for when you're going to buy a house, it doesn't look so hot.
That's right.
Right? And you've got to get that stuff under control.
Right.
So those are the kind of conversations you have to have with people
Absolutely.
sometimes. Walk me through exactly what DTI is. How does that work?
So basically what we do is we take the sum of all debt, and then to back it up a second here and say, you're going to have debt to income ratio, and you're going to have two sets of ratios. You have a front end ratio and you have a back end ratio. Okay. So what that means is that you have a housing ratio and then you have an all expense debt to income ratio. The housing ratio is taking the income compared to the monthly mortgage payment that you're looking to purchase, and it balances that against each other, right? So again, giving you a nice example here, if you made $5,000 a month on paper gross, because we're going off the gross salary figure.
It is gross.
Gross on W-2, correct.
Okay, got it.
On self-employed, it's net, but on W-2, it is gross income.
Okay.
Let's say you made $5,000. If your mortgage payment is $2,500, that means that you have a 50% front end debt to income ratio for housing.
I see.
Okay.
Yeah.
Now let's say you have a $1,000 car payment. Well, now you have realistically, you're looking at so 35. So what?
Subtracting the 1,000 from that equation.
Like a 70% debt to income ratio from for that number.
So you've got less wiggle room there.
Correct. Now, guidelines state that you can't exceed, generally, depending on the program, between 49 and 57% on the back end for the ratio. So again, really quickly explain and say front end ratio is housing, back end ratio is housing plus all your extra debt.
Other stuff.
Could be car payments, credit cards,
Student loans? Is that still part
student
of it?
loans.
Okay.
Now, even with student loans, that gets into a little bit of a wormhole.
Okay.
There, just to say that, on a student loan, some folks get really excited because they have a payment deferred.
Okay.
That's all well and
They're
good.
like, I'm good. It's deferred.
It's deferred.
But there's a little more
or
to
I'm
it
in
than that.
forbearance. Forbearance is also, hey, after the deferment, like, hey, I'm really still kind of struggling. I need to get my footing.
Yeah.
They'll put you on the zero payment plan, but you're not making a dent towards the debt.
Yeah.
So as a result of that, you actually need to count 50%. I'm so sorry. Half a percent.
Of what? The total debt amount?
The total debt amount.
Or what would be their monthly payment?
Their existing balance.
The total balance.
Yeah,
Okay.
absolutely.
And by the way, Mario, I'm sorry. I'm putting you on the spot on the student loans because this has come like very quickly to the front of a lot of people's minds again.
Absolutely.
Because it was kind of quiet and it was like off over here in this cat. And now it's like, all right, these are
Back
due
in the
again.
Forefront. That's right.
Yeah. And so there's probably a decent likelihood that people watching this are going to say, well, that's now on my radar again.
That's right.
Right.
That's right.
And so it's give it to me one more time.
Right. There's going to be different programs. You're going to have different guidance.
Okay.
So
Gotcha.
I would say as low as 0.5%.
Okay. All right.
That's going to be typical for some of the conventional programs, FHA as well.
Okay.
Now you get into a VA loan, which is for veterans. You're looking at actually taking 5% of whatever the remaining balance is and dividing that by 12, and then that is the actual payment that we count in there. So
I'm realizing really quickly that your job is definitely a lot of calculating stuff, right?
Little math in there, some numbers.
You're crunching quite a bit of digits, right?
Right.
But that is just, that's how that works, right? You got to make sure, I guess the bank, the lender, the people in the back end need to know that the math works out.
That's right.
Right. And so they need to know that their investment in this purchase is not going to just immediately default.
That's right. That's right.
And so is that really why this is all done?
Exactly. They want to make sure that you have the capacity to be able to take it on, that you're capable of being able to do it, and that you're not overextending yourself in the process, because really what they're analyzing is the risk.
Sure.
Right.
Sure.
They want to make sure that you're a good risk and that you're somebody that's going to pay the mortgage back. Right.
Yeah.
So that's a big detail there for sure.
So that was a crash course on DTI, a little side course on the craziness of student loans. Obviously, you need to talk to somebody like Mario if you've got those situations, because as you can see from this, he gave us a couple of round numbers, but really this requires like a one-on-one consultation because each person's situation is going to be a little different.
Correct.
Depends on what type of a loan, how much the house is, what your credit history is, where you work, what field you're in, there's all kinds of stuff, right?
Right.
And that can only really be accomplished with a one-on-one consultation.
Absolutely. And I do want to make one mention of something else that's very, very relevant right now that's really coming up a lot more, especially in the age of AI and all the artificial intelligence things, is that we now have software that really is there to prevent fraud. And so to say we run documents through secure portals so that it can identify any sort of recurring withdrawals on bank statements for things that you may know as Klarna. Or the buy now, pay later stuff, right?
Yep.
And if an underwriter, when they're going through and they're looking at the review, sees this recurring Klarna payment, guess what? It's now part of your debt to income ratio.
Wow.
So those
are not off the record.
That's not off the record.
Wow.
A lot of folks think that it's it's not on there. It's not on it's not on the credit report. You're absolutely right.
Yeah.
But it's on your bank statements. You have a monthly liability every single month.
Wow.
And that can count towards your debt to income ratio.
Holy smokes. That is phenomenal. Well, that's good information, Mario. Obviously, there's a lot of things going on, but here's the next one. This is the question that I hear all the time. People always want to know this. It's that old question about the down payment.
Yeah.
Right. Everybody wants to know about the down payment. I still hear people telling me, is it still 20%? Is it still 20%? That's the standard, amount, right? Then you hear the opposite. It's all zero down. It's all zero down. Okay. Give us some clarification on this stuff, because that's a big one, right? How much money you have to bring to the table is a big part of this.
Correct. Yes.
Right?
So now there's always going to be flexibility and options in what we're actually doing here, right? So as a result, there's going to be different programs. There's first-time home buyer programs, which are designed to have low down payments. For example, on a conventional loan, for a first-time homebuyer, you can actually get in for 3% down.
Okay.
Most people think it's 5%.
Okay.
FHA, 3.5%.
Okay.
Now, VA is in its own world, which is,
Whole different
is incredible. 100% financing, 0% down or zero money down.
Yep.
And then on top of that, the thing you have to consider is closing costs, right?
Okay.
And so for some folks, they're budgeting money for a down payment, but they don't even realize or think about the fact that you need to have money for closing costs. Now, we're in a great environment to not go into a full-blown update, but just to say we're in a great environment right now where it really is a buyer's market, meaning sellers are accommodating the needs of buyers to be able to help sell their homes.
There you go.
Therefore, they're offering things like closing costs. They're offering things like additional assistance to be able to buy down the rate so that you can budget for the home that they're actually looking to purchase and everything there. So it's really, really neat. But just to say, to answer your question very simply, right? It does not require 20% down.
Okay.
It doesn't require 10% down. It doesn't require 5% down or 3% down. We offer down payment assistance options that can pay for the down payment.
Wow.
And then if you combine that with the contributions that the seller can potentially give you, I'll be honest with you, I have folks that get refunds at closing.
Wow.
Why would you get a refund?
Phenomenal.
Because you're giving earnest money up front. Earnest money being the good faith money that, it's like a deposit on the house, right?
Sure.
Like, hey, I want to buy your house. And you say, cool, we agree on the price. Great. Now, in good faith, I'm going to give you some money that's going to be held at a title company. So that way it can be something that's my skin in the game, right?
Sure.
And as long as the transaction goes through, then we get that money back.
There you go.
Really just simply put to say that it's really a great thing because you can get that earnest money back as a refund if the seller contributes enough towards closing.
So on the flip side of that equation, though, definitely not 20%, but does the 0% down loan still exist? Is that still out there in some cases?
There is things like USDA, for example.
You've got to be a little bit on the outskirts of San Antonio or wherever you're living to qualify for something. But that's still there? That's still a thing?
That still exists. There are some income restrictions there as well. And there is income restrictions generally with down payment assistance programs. We offer some assistance programs that don't have income restrictions.
Sure.
The rates are going to be a little bit higher for some of those, but just to simply say that there are options out there for zero down, absolutely.
Okay, that is beautiful. Okay, what about this? The Credit Confidence Homebuyers Club is really designed and geared primarily towards people that want to buy new construction, right?
Sure.
And just a reminder, if you're watching this, the Credit Confidence Homebuyers Club is designed to help you maximize the incentives that are out there, whether that be the stuff like Mario was just talking about, whether it's down payment type stuff, whether it's the incentive to be able to get literally like appliances and things like that, or whether it's rate buy downs and different things like that. So all of this stuff is intended to maximize all of the incentives that are out there. The program also includes a buyer's rebate on the realtor side. If you're part of this program, all realtors that are part of this program have to give some sort of a buyer's rebate to include reimbursing the credit repair costs somewhere in that equation as well. So there's a lot of goodies that are coming to the table working with our program, whether it's somebody like Mario that's able to do something or the builder themselves or the realtor. But my question to you now, Mario, is the process of buying significantly different if I'm buying a new construction versus an existing home, or is that still very similar?
Very similar, absolutely. And it needs to be similar. Again, every business is going to maybe have a slightly different tweak to their process, but really it involves start with starting, right?
Yeah.
Got to get it pre-approved. Need to make sure that we verify absolutely everything.
Sure.
The builder absolutely should be doing the exact same thing as far as the pre-approval piece goes for that.
Okay.
Now, of course, like you said, the incentives, all those things, they might have some different incentives that they offer you based on certain criteria of certain things. But at the end of the day, we like to remain as competitive as well to be able to earn those opportunities for new builds and pre-existing. Yeah, no, that's amazing. Now, one of the things that is a little bit different or unique about the builder experience is that sometimes there's that period of the construction, right? Sure.
There's a lot of them I see like 6 to 8 months, and
right.
Unless you're buying a spec home, which is like an inventory home, which means it's ready to go, right? What should someone be doing financially during that period while they're waiting for the house to be built, right? Because there are some do's and don'ts that you tell people, like be careful with this, make sure you're not doing that while we're doing it, whether they're in credit repair and they're doing this process with us, or even if they're ready to go, but they still have to wait for the house, it can be a little shaky, right? Like you don't want to disrupt things too much, right?
Right.
What are your rules or do's and don'ts in that process?
We call them the 10 Commandments.
That's amazing. I love that.
So it's, definitely the 10 Commandments for mortgage real estate, not to be confused with the other 10 Commandments.
Of course.
Just to say that, it really, a lot of them are centered around debt, but I'll say that, of course, starting with not quitting or changing your job is going to be something that's important.
Yeah.
You don't want to just all of a sudden like, hey, I'm just quitting my job. We're going to verify your employment. So this is a big deal there, right?
Yeah. Like you said earlier, you do have to bring the receipts.
That's right. That's right.
Yep.
Not buying any cars, trucks, vehicles, really not opening any new credit cards, not going late on any of your payments monthly.
Don't do that. Please don't
go late on your monthly payments.
That may be the cardinal sin of all right there.
That's really is. Yeah. That absolutely is. So, we like to poke a little bit of fun at it. I always tell people, hey, we have been, in my career of 21 plus years, I've literally had somebody do everything on my 10 commandment list. And some people that might include one of the commandments, which is spending the down payment. sounds silly, but some folks may spend the down payment. So But again, really not buying furniture for the house before you buy the house, not inquiring on credit. Avoid the credit inquiries, right?
Sure,
there's a lot of temptation sometimes because there's a big sale going on for a holiday, and then all of a sudden it's like, hey, well, we can put it on hold. We just need to run your credit. Well, here's what's going to happen with that is that we do a soft inquiry towards the end of the process to confirm that there was no new debt established or needed. Yeah. And as a result of that, if we notice that there was an inquiry made, we're going to have to ask questions as to why. And let's say you didn't take anything out, but it can delay your closing. And we don't want that to happen. That's something that we're real big sticklers about.
So, I got it. Yeah.
And then, just not changing bank accounts, again, making your payments on time and everything, not accumulating debt of any kind.
A lot of it's really common sense stuff.
Right.
But sometimes we forget certain even common sense things, and we need those reminders. You may need to add an 11th on there, which is my favorite, which is finding that least responsible family member of yours and co-signing on a car loan. That's actually we see that all the time.
That was I think number 9. I think I might have missed.
Okay, so it's already in there.
But absolutely, the co-signer thing is a real thing, and sometimes we'll get the folks. And again, there's certain rules that you can work through, but I will say this, right? If you've co-signed for somebody and they are making the monthly payment, you need to prove that it's been coming out of their sole bank account. You can't be joint on this account with them. Their sole bank account for 12 months to omit that payment.
Wow.
Sometimes folks think that you can do it as soon as, hey, they made a couple payments, they made 3 payments, they made 6 payments. No, you need 12 payments to be able to omit that liability.
Ouch.
So don't go co-signing for mijo or mija's credit card or whatever you might need to.
That's right.
This is if you're very serious about purchasing a house, this is a great thing to be mindful of.
Exactly. And by the way, Mario just dropped some amazing Spanglish on this podcast. He is fully able to speak Spanish. Yes?
Yes, I am. Absolutely.
100%.
Yes.
So keep that in mind. Yeah, that's right. If you need someone that can explain all of this in Spanish, Mario is also your guy for that. So that's very helpful.
Bilingual. Absolutely.
Mario, we're getting pretty close to wrapping up. I kind of want to close on just the last couple of questions, one of which is, if I had to ask you, after all this time in the game, 21 years in mortgage, I think 25 in banking, right, in total.
Right,
you started around the year 2000 at the
Absolutely.
bank. All these years, I mean, you saw the 2008 meltdown. You survived that. You survived the COVID era, and a bunch of other little smaller hiccups in between. What do you think at this point in time is one of your bigger differentiators as to what you with Triton Group bring to the table for people different than maybe what some of the other lenders that are out there do? Is there something that you feel that you pride yourself on, especially doing? What is it that really comes top of mind for you there?
Thank you for asking that. Really, it is the communication, number one, and then the consultative approach that we take in making sure that any home buyer is in the right position to purchase, right?
Yeah.
So I think that, you can chase things like interest rates and all those things, which again, I'm not saying we're not competitive. We are extremely competitive.
Sure.
But, you can get online and probably find somebody who's going to be, $200 less in fees. Well, again, my humble brag here is that I'm worth the extra $200 that you might save with somewhere else. In fact, the service that we offer to really assist the referral partner realtor in negotiating the sale, the transaction, the purchase, the contract with the seller, we take a direct approach with that, and we are advocating for the buyer. So again, we have these flexible hours that allow for us to be able to make some calls on the weekends if somebody's making an offer, right? So while there's a lot of different things that we offer, for folks, really, I would say the education, the communication that we offer throughout the entire process. We never want you to feel like you're walking alone. And really that consultative approach, we have a lot of different ways that we can position a buyer to set them up for success, and that really comes in a consultation, which what I'll add here is that a barrier of entry to work with us is that you have to meet with me. That's something that's really, really important for me. Now, it can be a Zoom. I like in person, but it can be a Zoom.
Sure.
I will tell you that 30 to 60 minutes that we meet together will be so beneficial for you, because it will set some great expectations on what to look forward to, but also making sure that we've custom catered the right plan for you.
Okay. I love that. And is that what really keeps you going after all these years, or is there a little more to it than that?
Yeah, I think there's a lot of different elements. I'm blessed to say that I work with my family, right? So
that's amazing.
I have my oldest son who works as my right hand. Sometimes he's my left hand because we get a little active in our schedules. But I will say my mom as well, Rosa. So we've got Darian, who's my oldest son. Mama Rosa is how we refer to my mom, who's our director of impressions. And
a resident mommy.
That's right.
And staff.
Gotta
have one of those.
Gotta have her taking care of us, and gotta have that friendly voice when you call in or you walk into the office.
She always smile. Has that. Yes, exactly. So, I feel like I'm actually walking into your home.
That's
right. When she's at the door like that, it's just like. And then it smells like good food in the back, like tortilla soup. So it's like, forget it, man. I mean, geez, I'm just going to stay here all day.
There you go. Hey, you're welcome to, man.
It's not a 30 to 60 minute, it's like a 3 or 4 hour with you guys, because you make it very welcoming. You make it very welcoming.
Thank you. We really work hard to make sure that it's a great environment for everybody to feel comfortable. A lot of folks feel sometimes apprehensive to come in and meet, or just feel a little bit nervous. They're worried about, oh my gosh, well, what if he says no? Well, no, listen, here's the thing. We're going to, like I said, everybody's a buyer. It always comes down to the timing.
But, 100%.
Absolutely.
Mario, this has actually been great. I think anyone watching who's thinking about buying a home, whether it's their first one or they're moving up, walked away with something that they can actually use. Mario, if people want to reach out to you directly, where should they go?
Yeah, so we've got a couple of solutions for that. You can visit us online at TritonGroupHomeLoans.com, which is our website. It's going to lead you to basically everything. The application explains our process in depth. You can watch some videos there. You can also check us out on social media. We're on all the platforms as Triton Group, Legacy Mutual Mortgage. You can call us. 210-476-5523. That number is our office line. You can reach out to us, send us an email. You can email TritonGroup@LegacyMutual.com. So again,
amazing.
Lots of resources there for sure. But if you visit us online, you'll have access to all of that.
Yeah, that's a one-stop shop.
Absolutely.
Yeah. Perfect. Well, that'll be linked in the description below, so go check that out. Thank you again for coming on, bro.
Oh, thank you so much, man, for having me. Absolutely.
Super informative, and you've always been a wealth of knowledge and information. And again, a great homie of mine.
No, likewise, man. It's a blessing and an opportunity. I appreciate you taking the time to come meet with us here today.
Absolutely. It's my pleasure. And to everyone watching, if you've got something out of this, do us a favor and like the video, subscribe, drop a comment with any questions that you still have. Be sure also to, again, visit Mario's website. We do read all of the questions and all the comments, and we will absolutely take the time to review that, and we may even feature that question on a future episode.
That's awesome.
So you never know. But otherwise, Mario, thanks again, bro.
Thank you, Marco. Appreciate you. Thanks for all you do.
See you on the next one.
That's another builder, another community, another step closer to a home that's actually yours. The incentives are real. The homes are out there. The only thing left is your credit, and that's exactly what we fix. Visit creditconfidence.club and let's get you to the closing table.